Question 1. Which of the following best demonstrates the principle of indemnity in property insurance? A. An insured receiving a payout that includes the full market value of their property after a partial loss. B. An insured receiving payment for their actual losses without gaining a financial advantage. C. An insurer refusing to pay a claim because the insured failed to disclose unrelated prior claims. D. An insured receiving compensation for an excluded peril through a goodwill gesture by the insurer. Correct answer. B. An insured receiving payment for their actual losses without gaining a financial advantage. Explanation. The principle of indemnity ensures that the insured is compensated for their actual financial loss but does not profit from the insurance claim. This prevents overinsurance and moral hazard. Question 2. John owns a manufacturing business in Wyoming. During routine operations, one of his employees suffers an injury due to equipment failure. John's workers' compensation policy covers the injury. What is the primary legal protection afforded to John under the exclusive remedy doctrine? A. John cannot be held liable for damages exceeding the policy limits. B. John cannot be sued by the employee for the injury. C. John is protected from lawsuits filed by third parties impacted by the injury. D. John is only liable for injuries that occur due to his negligence. Correct answer. B. John cannot be sued by the employee for the injury. Explanation. The exclusive remedy doctrine protects employers by making workers' compensation benefits the sole remedy for employees injured on the job. This prevents employees from suing their employers for additional damages. Question 3. Sarah files a claim under her homeowner's policy for damage caused by a burst pipe. The policy has a deductible of $1,000 and the total repair cost is $8,000. The insurer approves the claim. How much will Sarah receive from her insurer? A. $7,000. B. $8,000. C. $1,000. D. $6,000. Correct answer. A. $7,000. Explanation. In property insurance, the deductible is subtracted from the total claim amount before the insurer pays. Total repair cost, $8,000 deductible, $1,000 payment from insurer, $8,000, $1,000 all equals $10,000. Question 4. Which of the following is a responsibility of insurance producers under Wyoming's market conduct regulations? They offering insurance products only from licensed and authorized insurers. B. Disclosing policy limits to claimants only upon written request. C. Retaining client funds for personal investment to enhance returns. D. Changing policy terms to favor clients without insurer approval. Correct answer. A. Offering insurance products only from licensed and authorized insurers. Explanation. Wyoming's market conduct regulations require producers to act ethically and within legal boundaries. Question 5. A Wyoming homeowner purchases a policy that provides replacement cost coverage. Their roof damaged by a covered peril has a current value of $5,000 but would cost $12,000 to replace. How much will the homeowner receive under the replacement cost provision, assuming no deductible? A. $5,000. B. $7,000. C. $12,000. D. $0. Correct answer. C. $12,000. Explanation. Replacement cost coverage reimburses the insured for the full cost to replace the damaged property without considering depreciation. Question 6. Jacob, a Wyoming contractor, installs a faulty electrical system in a client's home, causing a fire. Which type of liability coverage would address the damage to the client's property? A. Products liability coverage. B. Completed operations liability coverage. C. Premises liability coverage. D. Professional liability coverage. Correct answer. B. Completed operations liability coverage. Explanation. Completed operations liability covers damage or injury arising from work performed after the work is completed or abandoned. Question 7. Which of the following best describes a situation where Wyoming insurance regulations might allow an insurer to cancel a personal auto insurance policy? A. The insured files a claim for damages caused by an at-fault accident. B. The insured is found guilty of fraudulently obtaining the policy. C. The insured has a history of multiple speeding tickets over 5 years ago. D. The insured changes vehicles without notifying the insurer. Correct answer. B. The insured is found guilty of fraudulently obtaining the policy. Explanation. Wyoming regulations allow insurers to cancel policies for specific reasons such as fraud, misrepresentation, or non-payment of premiums. Question 8. A Wyoming business owner purchases a commercial property insurance policy with an 80% coinsurance clause. Their building is insured for $400,000 but has a replacement cost of $600,000. If a covered loss of $100,000 occurs, how much will the insurer pay, assuming no deductible? A. $66,667. B. $80,000. C. $100,000. D. $50,000. Correct answer. A. $66,667. Explanation. Coinsurance requires the insured to maintain coverage equal to a specified percentage of the property's value. If underinsured, the claim payout is reduced. Question 9. In Wyoming, a consumer submits a claim under their homeowner's policy for damages caused by a flood. The claim is denied. What is the most likely reason? A. Flood damage is only covered if the property is located in a designated floodplain. B. The policy does not include flood coverage unless explicitly endorsed or purchased separately. C. The claim was filed outside the policy's allowable time period for reporting losses. D. Flood insurance is only available through private insurers, not homeowner policies. Correct answer. B. The policy does not include flood coverage unless explicitly endorsed or purchased separately. Explanation. Standard homeowner policies do not cover flood damage. Flood insurance must be purchased separately, often through the National Flood Insurance Program, NFIP. Question 10. A Wyoming resident files a liability claim under their homeowner's policy for a guest injury on their property. The insurer denies the claim, stating the resident did not notify them of the incident promptly. What is the most relevant principle in this situation? A. Waiver and estoppel. B. Notice of loss requirement. C. Subrogation rights. D. Doctrine of adhesion. Correct answer. B. Notice of loss requirement. Explanation. Insurance policies require prompt notification of claims to allow insurers to investigate and defend against liability. Question 11. In a standard homeowner's insurance policy, which of the following perils is typically not covered under the basic policy form? A. Fire. B. Theft. C. Earthquake. D. Vandalism. Correct answer. C. Earthquake. Explanation. Earthquake coverage is generally excluded from standard homeowners insurance policies and often requires a separate endorsement or policy. Basic policy forms typically cover fire, theft, and vandalism. Earthquakes are considered high-risk events that require specialized coverage due to the potential for catastrophic loss. Question 12. Which of the following is an example of an indirect loss that may be covered under a property insurance policy? A. Fire damage to the insured's home. B. Loss of rental income due to a covered event. C. Theft of jewelry from the insured's home. D. Hail damage to the insured's car. Correct answer. B. Loss of rental income due to a covered event. Explanation. An indirect loss refers to the financial impact that results from an inability to use the insured property, such as lost rental income while the property is being repaired after. A covered loss, direct losses, answers A, C, and D involve physical damage or a loss to property. Question 13. In an insurance contract, which term refers to the insurer's right to assume the legal rights of the insured to recover losses from a third party? A. Indemnity. B. Subrogation. C. Assignment. D. Waiver. Correct answer. B. Subrogation. Explanation. Subrogation allows the insured to step into the shoes of the insured to pursue recovery from a third party responsible for the loss. This right helps insurers recoup some costs, reducing premiums. Indemnity, answer A, is the principle of making the insured whole. Assignment, answer C, transfers policy ownership, and waiver, answer D, is the voluntary relinquishment of a known right. Question 14. Which of the following statements best describes the concept of replacement cost coverage in property insurance? A. It reimburses the insured based on the depreciated value of the property. B. It pays the insured the cost to replace the damaged property with similar items. C. It provides an agreed upon amount regardless of actual repair costs. D. It covers the original purchase price of the damaged property. Correct answer. B. It pays the insured the cost to replace the damaged property with similar items. Explanation. Replacement cost coverage reimburses the insured for the cost of replacing damaged property with new items of like kind and quality without considering depreciation. Actual cash value, answer A, would account for depreciation, and the other options, answer C and D, do not accurately describe replacement cost. Question 15. Which type of insurance policy would provide coverage if a customer slips and falls in a business's retail store? A. Product liability insurance. B. Commercial auto insurance. C. General liability insurance. D. Workers' compensation insurance. Correct answer. C. General liability insurance. Explanation. General liability insurance covers bodily injury and property damage claims arising from accidents on the insured's premises. A slip and fall incident in a retail store would be covered by this policy. Product liability, answer A, covers injuries due to products. Commercial auto, answer B, covers vehicles. And workers' compensation, answer D, covers employees. Question 16. In an insurance policy, which section specifies the duties of the insured and insurer in the event of a loss? A. Exclusions. B. Insuring agreement. C. Conditions. D. Declarations. Correct answer. C. Conditions. Explanation. The conditions section outlines the responsibilities of both the insured and insurer following a loss. It may include requirements for reporting claims, cooperating with investigations, and protecting damaged property. The exclusions section, answer A, lists perils not covered. The insuring agreement, answer B, defines coverage. And the declarations page, answer D, includes policy details like names and coverages. Question 17. An insured auto policy has split limits of $50,000, $100,000, $25,000. What does the $100,000 represent? A. Maximum coverage for property damage per accident. B. Maximum bodily injury coverage per person. C. Maximum bodily injury coverage per accident. D. Maximum deductible for bodily injury. Correct answer. C. Maximum bodily injury coverage per accident. Explanation. In split limits, the second figure, $100,000, represents the maximum amount payable for bodily injury per accident, regardless of the number of people injured. The first figure, $50,000, is the limit per person for bodily injury, and the third, $25,000, is the property damage limit. Question 18. Which of the following best describes a binder in insurance? A. A temporary contract of insurance providing coverage until the policy is issued. B. The primary source of coverage for high-value property. C. A guarantee that the insurer will issue a policy regardless of risk. D. An endorsement that increases policy limits. Correct answer. A temporary contract of insurance providing coverage until the policy is issued. Explanation. A binder is a temporary agreement that provides immediate insurance coverage until the formal policy can be issued. It acts as a short-term proof of insurance, covering the insured against potential losses. Answers B, C, and D do not accurately describe the purpose or function of a binder. Question 19. In property insurance, which of the following terms refers to the concept that insurance should restore the insured to the same financial position as before the loss? A. Waiver. B. Indemnity. C. Reimbursement. D. Subrogation. Correct answer. B. Indemnity. Explanation. The principle of indemnity ensures that insurance reimburses the insured only to the extent of their financial loss, preventing profit from a claim. This principle is foundational in property and casualty insurance to maintain fairness. Reimbursement, answer C, involves specific payments. Waiver, answer A, is the relinquishment of rights, and subrogation, answer D, allows the insurer to seek recovery from responsible third parties. Question 20. If an insured's home sustains damage from a covered peril, which of the following clauses might require the insured to repair or replace the property before receiving full reimbursement? A. Pro rata clause. B. Coinsurance clause. C. Deductible clause. D. Restoration clause. Correct answer. B. Coinsurance clause. Explanation. The coinsurance clause in a property policy often requires the insured to carry a certain percentage of the property's value as coverage. If this condition is not met, the insured may only receive a partial payout. To receive full reimbursement, the insured must generally comply with the coinsurance requirements, which may involve repairing or replacing damaged property. The other clauses listed do not relate to repair or replacement requirements in this way. Question 21. Which of the following is typically covered under the liability section of a standard homeowner's insurance policy? A. Fire damage to the insured's home. B. Theft of the insured's personal property. C. Medical expenses for a guest injured on the insured's property. D. Flood damage to the basement. Correct answer. C. Medical expenses for a guest injured on the insured's property. Explanation. The liability section of a homeowner's policy covers claims for bodily injury or property damage for which the insured is legally responsible, including medical expenses for guests injured on the property. Fire damage and theft and B are covered under property sections, while flood damage D usually requires separate coverage. Question 22. What type of policy would a business owner purchase to cover losses from a cyber attack that leads to a data breach? A. Commercial property insurance. B. General liability insurance. C. Cyber liability insurance. D. Business interruption insurance. Correct answer. C. Cyber liability insurance. Explanation. Cyber liability insurance provides coverage for incidents related to cyber attacks such as data breaches, ransomware, and network security failures. Other policies, B, D, do not specifically address cyber-related risks. Question 23. Which type of insurance coverage is specifically designed to cover legal fees and settlements when a professional is sued for negligence in their work? A. General liability insurance. B. Professional liability insurance. C. Directors and officers, DO, insurance. D. Workers' compensation insurance. Correct answer. B. Professional liability insurance. Explanation. Professional liability insurance, also known as errors and omissions, EO, insurance, protects professionals against claims of negligence or inadequate work. General liability, A, covers physical injuries and property damage, while DO insurance, C, covers company leadership and workers' compensation. D, pertains to employee injuries. Question 24. Which term best describes the portion of an insurance policy that states the insured's obligations in the event of a loss? The insuring agreement. B, conditions. C, exclusions. D, declarations. Correct answer. B, conditions. Explanation. The conditions section of an insurance policy outlines the responsibilities and obligations of both the insurer and the insured. This includes what actions must be taken when a loss occurs, such as reporting and providing proof of loss. Question 25. Which of the following is not a function of an insurance underwriter? A. Assessing the risk of insuring an applicant. B. Determining the terms of a policy. C. Selling insurance policies directly to customers. D. Setting premium rates based on risk. Correct answer. C. Selling insurance policies directly to customers. Explanation. Insurance underwriters evaluate risks, determine policy terms, and set premiums. Selling insurance policies is typically done by agents or brokers, not underwriters. Question 26. What type of auto insurance coverage is necessary for damage to the policyholder's own vehicle in a collision they caused? A. Liability coverage. B. Comprehensive coverage. C. Collision coverage. D. Uninsured motorist coverage. Correct answer. C. Collision coverage. Explanation. Collision coverage pays for the repair or replacement of the policyholder's vehicle when they are at fault in an accident. Liability coverage, A, covers damage to others, while comprehensive, B, covers non-collision incidents, and uninsured motorist, D, applies when the other driver lacks insurance. Question 27. What type of policy should an individual purchase if they want protection that will pay out benefits upon their death? A, disability insurance. B. Health insurance. C. Term life insurance. D. Long-term care insurance. Correct answer. C. Term life insurance. Explanation. Term life insurance provides death benefits to beneficiaries if the insured passes away during the term of the policy. Disability insurance A. Covers lost income due to inability to work. Health insurance B. Pays for medical expenses. And long-term care insurance D. Covers extended care services. Question 28. Which insurance concept refers to the transfer of risk from an individual to an insurer in exchange for premium payments? A. Indemnity. B. Reinsurance. C. Risk management. D. Risk pooling. Correct answer. A. Indemnity. Explanation. Indemnity refers to the concept of compensating for a loss, effectively transferring risk from an individual to an insurer who accepts it in return for premiums. Reinsurance B. Involves risk transfer between insurers, and risk pooling D. Spreads risk among a group. Question 29. What is the purpose of an insurable interest in an insurance contract? A. To determine the insurance policy's deductible. B. To ensure the policyholder can receive coverage for any risk. C. To prevent policyholders from profiting from insurance fraud. D. To set the maximum claim amount. Correct answer. C. To prevent policyholders from profiting from insurance fraud. Explanation. Insurable interest means that the policyholder must have a legitimate interest in the insured item or person, preventing them from obtaining insurance to profit from a loss. It ensures a genuine economic stake exists in the preservation of the insured property or person. Question 30. Which type of homeowner's policy is specifically designed for renters? A. HA2. B. HA3. C. HA4. D. HA5. Correct answer. C. HA4. Explanation. The HA4 policy, known as a renter's policy, provides coverage for personal property and liability for individuals who rent their homes. Other policies, HA2, HA3, HA5, are tailored for homeowners. Question 31. Under a homeowner's insurance policy, which of the following best describes the primary purpose of an additional living expense provision? A. To cover the costs of repairing the insured's property after a loss. B. To reimburse the insured for lost rental income. C. To cover increased expenses for temporary housing if the home is uninhabitable due to a covered loss. D. To pay for routine maintenance costs of the insured property. Correct answer. C. To cover increased expenses for temporary housing if the home is uninhabitable due to a covered loss. Explanation. The additional living expense L provision in a homeowner's insurance policy is designed to help the policyholder maintain their standard of living if their home is rendered uninhabitable by a covered peril such as fire or storm damage. This coverage reimburses costs for temporary housing, meals, and other increased expenses until repairs are complete. It does not cover repairs to the property, lost rental income, or regular maintenance costs which are addressed in different parts of the policy or are excluded. Question 32. What is the purpose of subrogation in a property insurance policy? A. To allow the insurer to recover funds from a third party responsible for a loss. B. To waive the deductible for the insured. C. To extend coverage to multiple properties owned by the insured. D. To provide a discount on premium for policyholders who have no claims. Correct answer. A. To allow the insurer to recover funds from a third party responsible for a loss. Explanation. Subrogation gives the insurer the right to pursue a third party that caused a loss to the insured. After the insurer pays the insured for the loss, it can step into the shoes of the insured to seek compensation from a liable party. This process helps insurers control costs and premiums. Deductibles, multiple property coverage, and claim-free discounts are not related to subrogation. Question 33. An insured has a replacement cost policy on their property, but they are only compensated for the actual cash value, CV, after a loss. Under what condition would they later receive the full replacement cost? They agree to settle the claim immediately without further adjustments. B. They complete the necessary repairs or replacement of the damaged property. C. The damage is caused by a natural disaster. D. They have been insured with the same company for over 5 years. Correct answer. B. They complete the necessary repairs or replacement of the damaged property. Explanation. In a replacement cost policy, initial payments may be limited to the actual cash value, ACV, until the insured provides evidence of repairs or replacement. Once these are completed, the insurer typically pays the difference up to the full replacement cost. The policyholder's tenure with the company or cause of damage does not typically impact this condition, and settling without adjustments would forfeit the chance for additional compensation. Question 34. Which of the following is an example of loss of use coverage in a property insurance policy? Q. A reimbursement for temporary housing costs if the insured's home is uninhabitable. B. Replacement of personal property damaged by fire. C. Payment for legal expenses if the insured is sued. D. Coverage for landscaping destroyed by a covered peril. Correct answer: a reimbursement for temporary housing costs if the insured's home is uninhabitable. Explanation: loss of use coverage, also known as additional living expenses, is designed to help with temporary living costs if the insured's residence becomes uninhabitable due to a covered loss. This coverage is separate from property replacement, legal liability, or landscaping coverage, which are handled by other sections of a policy. Question 35. Which of the following best describes the concept of coinsurance in property insurance? A. A policy provision requiring the insured to pay a percentage of each claim. B. An arrangement where multiple insurers cover the same property. C. A requirement that the insured maintain insurance equal to a specified percentage of the property's value. D. An additional premium charged for high-value items. Correct answer: C. A requirement that the insured maintain insurance equal to a specified percentage of the property's value. Explanation: coinsurance is a policy condition requiring the insured to carry insurance equal to a specific percentage, often 80% or 90% of the property's value. If the insured fails to meet this requirement, they may be penalized by receiving a reduced claim payout. This concept does not involve per claim cost sharing, multiple insurers, or high-value item premiums. Question 36. In a commercial property policy, what is typically covered under business interruption insurance? A. Physical damage to the insured's building. B. Lost profits and ongoing expenses while the business is closed due to a covered peril. C. Costs of replacing damaged machinery. D. Payment for employee injury claims. Correct answer: B. Lost profits and ongoing expenses while the business is closed due to covered peril. Explanation: business interruption insurance provides financial protection for a business's lost income and ongoing expenses if it cannot operate due to a covered event like a fire. Physical damage, machinery replacement, and employee injury claims are addressed separately, usually under property, equipment, and workers' compensation coverage. Question 37. An insured person accidentally causes a kitchen fire while cooking, leading to extensive smoke and fire damage throughout the home. Which part of a homeowner's insurance policy would most likely pay for the repair costs? A. Personal liability coverage. B. Medical payments to others. C. Dwelling coverage. D. Loss of use coverage. Correct answer: C. Dwelling coverage. Explanation: dwelling coverage in a homeowner's policy is designed to cover physical damage to the insured structure, including fire and smoke damage. Personal liability coverage is for injuries or property damage to others. Medical payments cover injuries to guests, and loss of use covers additional living expenses if the home is uninhabitable. Question 38. Which of the following describes a key difference between an open peril policy and a named peril policy? A. An open peril policy covers only specified risks, while a named peril policy covers all risks except those excluded. B. A named peril policy covers only specified risks, while an open peril policy covers all risks except those specifically excluded. C. Both policies cover all risks but differ in their exclusions. D. A named peril policy is for homeowners, while an open peril policy is for renters. Correct answer: B. A named peril policy covers only specified risks, while an open peril policy covers all risks except those specifically excluded. Explanation: named peril policies limit coverage to explicitly listed perils, e.g., fire, theft, whereas open peril policies provide broader protection, covering any risk except those listed as exclusions. These policies apply to both homeowners and renters, contrary to answer option D. Question 39. Which of the following is true about replacement cost coverage compared to actual cash value? Receive coverage. The replacement cost pays the depreciated value, while a CV pays for the full replacement without depreciation. B. Replacement cost pays the full cost to replace the item without depreciation, while a CV deducts depreciation. C. Both replacement cost and a CV are calculated based on the market value of the item. D. A CV typically has a higher premium than replacement cost coverage. Correct answer. B. Replacement cost pays the full cost to replace the item without depreciation, while a CV deducts depreciation. Explanation. Replacement cost coverage reimburses the insured for the full cost to replace damaged property with a similar item without considering depreciation. Actual cash value, ACV, coverage, however, takes depreciation into account, meaning the insured receives a lesser amount based on the item's age or condition. Question 40. If a policyholder fails to disclose a known hazard when applying for property insurance, what could be the insurer's response upon discovering this omission after a loss occurs? The insurer must still pay the claim regardless of the omission. B. The insurer may rescind the policy if the omission is considered material. C. The insurer can deny the claim but cannot cancel the policy. D. The insurer is required to adjust the premium to reflect the undisclosed risk. Correct answer. B. The insurer may rescind the policy if the omission is considered material. Explanation. In property insurance, a material omission, such as failing to disclose a significant hazard, can give the insurer grounds to rescind, void, the policy if it influenced the underwriting decision. Non-material omissions may not affect coverage, and premium adjustments typically do not apply retroactively in such cases. Question 41. What is the main purpose of the coinsurance clause in a property insurance policy? A. To reduce the deductible. B. To ensure that the insured shares in the risk of loss. C. To provide additional liability coverage. D. To eliminate the need for an appraisal. Correct answer. B. To ensure that the insured shares in the risk of loss. Explanation. The coinsurance clause requires the policyholder to carry a certain percentage of the property value as coverage. If the insured does not meet this requirement, they must share a portion of the loss with the insurer. This encourages policyholders to purchase sufficient insurance coverage. Question 42. Which type of life insurance policy provides a death benefit and cash value accumulation that can grow based on the performance of a portfolio of investments? A. Term life insurance. B. Universal life insurance. C. Variable life insurance. D. Whole life insurance. Correct answer. C. Variable life insurance. Explanation. Variable life insurance offers both a death benefit and an investment component, where the cash value can increase based on the performance of the chosen investments. Term life A. provides coverage without cash value. Universal life B. has flexible premiums and cash value, and whole life D. offers guaranteed cash value growth. Question 43. Which type of auto insurance coverage is mandatory in most states and covers injuries to other people and damage to their property when you are at fault in an accident? A. Collision coverage. B. Comprehensive coverage. C. Liability coverage. D. Uninsured motorist coverage. Correct answer. C. Liability coverage. Explanation. Liability coverage is required in most states and pays for bodily injury and property damage to others if the policyholder is at fault in an accident. Collision A and comprehensive B cover damages to the policyholder's vehicle, while uninsured motorist D covers accidents involving uninsured drivers. Question 44. In a health insurance policy, what is the term for the fixed amount the insured pays for each medical service or prescription? A. Premium. B. Deductible. C. Copayment. D. Coinsurance. Correct answer. C. Copayment. Explanation. A copayment is a set amount the insured pays for a specific service or prescription, with the remainder covered by insurance. A premium A is the payment for the policy. The deductible B is the amount paid before insurance starts covering costs, and coinsurance D is the percentage split of costs after the deductible is met. Question 45. Which of the following policies provides coverage for a property owner against loss of rental income if the property becomes uninhabitable due to a covered peril? A. Liability insurance. B. Renter's insurance. C. Loss of use coverage. D. Business interruption insurance. Correct answer. C. Loss of use coverage. Explanation. Loss of use coverage compensates for lost rental income if the insured property is uninhabitable due to covered peril. Liability insurance A. Covers legal claims. Renter's insurance B. Protects tenants. And business interruption insurance D. Is for business-related income loss. Question 46. What type of insurance coverage protects a professional from claims of negligence or inadequate work? A. General liability insurance. B. Workers' compensation insurance. C. Professional liability insurance. D. Business owner's policy. Correct answer. C. Professional liability insurance. Explanation. Professional liability insurance, also known as errors and omissions insurance, covers professionals against claims of negligence or inadequate work. General liability insurance A. Covers third-party bodily injury and property damage. Workers' compensation B. Covers employee injuries. A business owner's policy D. Is a comprehensive policy for small businesses. Question 47. Which of the following statements about a deductible in an insurance policy is correct? A. It is the amount the insurer pays before the insured contributes. B. It is the maximum amount the insured will pay in a policy period. C. It is the portion of a covered loss paid by the insured before insurance coverage begins. D. It is a premium rebate offered at the end of the policy term. Correct answer. C. It is the portion of a covered loss paid by the insured before insurance coverage begins. Explanation. A deductible is the amount an insured must pay out of pocket before the insurer covers any costs for a claim. It does not involve the insurer paying first A. A maximum cap on insured payments B. Or a rebate D. Question 48. What type of homeowner's insurance coverage is specifically for additional living expenses if a home is uninhabitable due to covered peril? A. Dwelling coverage. B. Personal property coverage. C. Additional living expenses. L. Coverage. D. Liability coverage. Correct answer. C. Additional living expenses. L. Coverage. Explanation. ALE coverage pays for the additional costs of living elsewhere while the home is being repaired after damage from a covered peril. Dwelling coverage A. Repairs or rebuilds the home. Personal property coverage B. Covers belongings. And liability coverage D. Protects against legal claims. Question 49. What is the primary benefit of having a HA5 homeowner's insurance policy compared to a HA3 policy? A. It provides coverage only for named perils. B. It offers comprehensive open peril coverage for both the dwelling and personal property. C. It has a lower premium cost. D. It includes earthquake insurance as standard. Correct answer. B. It offers comprehensive open peril coverage for both the dwelling and personal property. Explanation. A HA5 policy covers all perils except those specifically excluded for both the dwelling and personal property. A HA3 policy provides open peril coverage for the dwelling but named peril coverage for personal property. HA5 does not inherently include earthquake insurance D or come with lower premiums C. Question 50. Which of the following is not typically covered under a standard homeowner's insurance policy? A. Damage from fire. B. Theft of personal belongings. C. Flood damage. D. Vandalism. Correct answer. C. Flood damage. Explanation. Flood damage is generally excluded from standard homeowners insurance policies and requires separate flood insurance. Fire damage A. Theft B. And vandalism D. Are typically covered by most standard policies. Question 51. Which of the following is an example of a moral hazard in insurance? A. A house being located in a flood zone. B. A person being careless with their property because they have insurance coverage. C. A property being susceptible to natural disasters. D. An increase in the market value of A property. Correct answer. B. A person being careless with their property because they have insurance coverage. Explanation. A moral hazard occurs when the behavior of the insured changes as a result of having insurance, such as being less careful because they know potential damages will be covered. Source. Insurance hazard types explain. Question 52. In insurance terminology, the loss ratio is A. The ratio of the policy's premium to the total value of the insured property. B. The ratio of incurred claims to the earned premiums. C. The percentage of policies canceled within a year. D. The difference between actual and estimated losses. Correct answer. B. The ratio of incurred claims to the earned premiums. Explanation. The loss ratio is a key metric that indicates the profitability of an insurance policy. It's calculated by dividing the total incurred claims by the total earned premiums, showing how much of the premium is being used to pay claims. Source. NY Insurance Loss Ratio Definitions. Question 53. What is a replacement cost in property insurance? A. The cost to rebuild or replace a property after depreciation is deducted. B. The amount of money an insurance company pays regardless of current prices. C. The cost to replace the damaged property without deduction for depreciation. D. The total market value of the property at the time of purchase. Correct answer. C. The cost to replace the damaged property without deduction for depreciation. Explanation. Replacement cost refers to the amount it would take to replace or rebuild the insured property at current prices without considering depreciation, ensuring full restoration. Source. NY Replacement Cost Coverage explained. Question 54. A binder in insurances. A. A formal contract that outlines long-term coverage. B. A temporary contract that provides immediate insurance coverage until a policy is issued. C. A document showing a policyholder's payment history. D. A clause that restricts certain types of coverage. Correct answer. B. A temporary contract that provides immediate insurance coverage until a policy is issued. Explanation. A binder is a temporary agreement that provides proof of insurance coverage while the actual policy is being processed. It ensures that the policyholder is protected in the interim period. Source. Insurance Binder Overview. Correct answer. C. It is the periodic payment made by the policyholder to maintain insurance coverage. Explanation. An insurance premium is the payment made by the policyholder to keep their insurance policy active. It is not the deductible, A. The total coverage amount, B. Or the maximum payout, D. Question 56. Which type of life insurance provides coverage for a specific term and does not accumulate cash value? A. Whole life insurance. B. Universal life insurance. C. Term life insurance. D. Variable life insurance. Question 56. The term underwriting in insurance refers to A. The process of paying out claims. B. The method of filing a claim. C. The process of evaluating risk in determining policy terms. D. The calculation of the policyholder's deductible. Correct answer. C. The process of evaluating risk in determining policy terms. Explanation. Underwriting is the process through which insurers assess the risk associated with a potential policyholder and determine appropriate coverage terms and premiums. Source. Insurance underwriting process explained. Question 57. Which of the following best defines coinsurance and property insurance? A. The sharing of insurance coverage between two different insurers. B. The splitting of premiums between the policyholder and the insurer. C. A clause that requires the policyholder to insure a certain percentage of the property's value. D. A policy that covers two properties under one plan. Correct answer. C. A clause that requires the policyholder to insure a certain percentage of the property's value. Explanation. Coinsurance is a provision in property insurance that requires the insured to carry insurance equal to a specified percentage of the property value. Failure to do so may result in reduced claim payments. Source. NY Coinsurance Clause Details. Question 58. What is the main function of a reinsurance company A. To provide individual policyholders with supplementary coverage. B. To issue direct policies to the public. C. To insure insurance companies against their own risks. D. To handle policy renewals for primary insurers. Correct answer. C. To insure insurance companies against their own risks. Explanation. A reinsurance company provides insurance for other insurance companies, allowing them to manage risk by spreading potential liabilities more broadly. Source: NY Reinsurance Fundamentals. Question 59. The principle of subrogation allows an insurer to A. Pay a claim in installments. B. Reclaim expenses from a third party after compensating the insured. C. Deny claims involving negligence. D. Raise premiums without notice. Correct answer. B. Reclaim expenses from a third party after compensating the insured. Explanation. Subrogation enables the insurer to recover the cost of a claim from a third party responsible for the loss. This ensures that the party at fault ultimately bears the financial responsibility. Source: NY Insurance Subrogation Rules. Question 60. In a life insurance policy, the beneficiary is A. The insurance company that issues the policy. B. The person or entity that receives the policy's proceeds upon the policyholder's death. C. The policyholder who makes premium payments. D. The underwriter who assessed the risk. Correct answer. B. The person or entity that receives the policy's proceeds upon the policyholder's death. Explanation. A beneficiary is the individual or entity designated by the policyholder to receive the death benefit from a life insurance policy when the policyholder passes away. Source: NY Life Insurance Beneficiary Details. Question 61. What is the primary purpose of the grace period in an insurance policy? A. To allow the insurer extra time to process claims. B. To give the policyholder additional time to pay a premium without losing coverage. C. To provide a time frame for policy adjustments by the insurer. D. To extend the policy coverage period by 1 month. Correct answer. B. To give the policyholder additional time to pay a premium without losing coverage. Explanation. A grace period allows a policyholder to make a premium payment after the due date without facing immediate policy cancellation. This provision helps ensure that coverage continues while the insured addresses the payment. Options A, C, and D do not accurately describe the purpose of the grace period. Question 62. In the context of property insurance, what does the term replacement cost refer to? A. The current market value of the property. B. The cost to replace damaged property without considering depreciation. C. The insured amount stated in the policy, regardless of actual costs. D. The value of the property after subtracting the deductible. Correct answer. B. The cost to replace damaged property without considering depreciation. Explanation. Replacement cost is the amount needed to replace damaged property with a new item of similar kind and quality without deducting for depreciation. This ensures the policyholder can restore their property to its original state. Options A, C, and D misrepresent the replacement cost concept. Question 63. Which type of auto insurance coverage pays for the repair of an insured's vehicle in the event of a collision regardless of fault? A. Liability coverage. B. Collision coverage. C. Comprehensive coverage. D. Uninsured motorist coverage. Correct answer. B. Collision coverage. Explanation. Collision coverage pays for the repair or replacement of the insured's vehicle following a collision with another vehicle or object, regardless of fault. Liability coverage, option A, covers damage to others. Comprehensive coverage, option C, applies to non-collision events. And uninsured motorist coverage, option D, covers injuries and damages caused by uninsured drivers. Question 64. Why is an endorsement added to an insurance policy? A. To extend the policy term automatically. B. To provide additional coverage or modify the terms of the policy. C. To exclude certain types of losses from coverage. D. To reduce the premium payment required. Correct answer. B. To provide additional coverage or modify the terms of the policy. Explanation. An endorsement, or rider, is used to amend or add coverage to an existing insurance policy. It allows policyholders to tailor their policy to fit specific needs, such as adding a valuable item, or modifying conditions. Options A, C, and D do not reflect the purpose of endorsements. Question 65. What is the main function of liability insurance? A, to cover damage to the insured's property. B, to cover injuries or damages the insured causes to third parties. C, to pay for routine maintenance of the insured's vehicle or home. D, to provide a refund of the insurance premium at the end of the policy term. Correct answer. B, to cover injuries or damages the insured causes to third parties. Explanation. Liability insurance protects the insured from financial loss due to injuries or property damage they may cause to others. This ensures that the insured can compensate affected third parties without bearing the full financial burden. Options A, C, and D misrepresent the role of liability insurance. Question 66. Which of the following best describes coinsurance = property insurance policy? A, the sharing of risk between two insurers on a single policy. B, a penalty applied for underinsuring a property. C, an agreement that pays for all claims without any deductible. D, the splitting of premium payments between the insured and the insurer. Correct answer. B, a penalty applied for underinsuring a property. Explanation. Coinsurance is a clause that requires the policyholder to insure their property to a certain percentage of its value, typically 80% or more. If the property is underinsured, the insured may face a penalty when filing a claim. Options A, C, and D are not accurate descriptions of coinsurance. Question 67. What type of life insurance policy accumulates cash value over time? A, term life insurance. B, whole life insurance. C, accidental death insurance. D, variable annuity insurance. Correct answer. B, whole life insurance. Explanation. Whole life insurance policies provide lifetime coverage and include a cash value component that accumulates over time. Term life insurance, option A, does not build cash value. Accidental death insurance, option C, provides a payout only for accidental deaths, and variable annuity insurance, option D, is an investment product with different features. Question 68. Which of the following is typically an OT covered under a standard homeowner's insurance policy? A, fire damage to the insured's home. B, theft of personal belongings inside the home. C, flood damage from rising water. D, windstorm damage. Correct answer. C, flood damage from rising water. Explanation. Standard homeowners insurance policies do not cover flood damage. Flood coverage must be purchased as a separate policy or through specialized endorsements. Fire, theft, and windstorm damage, options A, B, and D, are commonly covered perils in standard policies. Question 69. What is an example of a peril that comprehensive auto insurance typically covers? A, damage from a car accident with another vehicle. B, a tree falling on the insured's car during a storm. C, damages due to driving over a pothole. D, liability for injuries to another driver. Correct answer. B, a tree falling on the insured's car during a storm. Explanation. Comprehensive auto insurance covers damages not related to collisions, such as natural disasters, vandalism, or theft. Option. It describes collision coverage. Option C may fall under collision coverage, and option D refers to liability insurance. Question 70. In health insurance, what does the term out-of-pocket maximum mean? A, the maximum amount the insurer will pay for a claim. B, the total expenses the insured must pay before the policy covers anything. C, the maximum amount an insured pays for covered services in a policy period before the insurer covers 100% of the remaining costs. D, the amount an insured pays for non-covered services. Correct answer. C, the maximum amount an insured pays for covered services in a policy period before the insurer covers 100% of the remaining costs. Explanation. The out-of-pocket maximum limits how much the insured will spend on deductibles, copayments, and coinsurance for covered services in a policy year. Once reached, the insurer covers 100% of additional covered expenses. Options A, B, and D do not accurately define this term. Question 71. What is the primary purpose of an insurance deductible? A, to increase the total coverage amount provided by the insurer. B. To reduce the premium paid by the policyholder. C. To share the cost of a claim between the insurer and the policyholder. D. To extend the length of the policy coverage period. Correct answer. C. To share the cost of a claim between the insurer and the policyholder. Explanation. A deductible is the amount the policyholder must pay out of pocket before the insurer covers the remaining cost of a claim. It ensures that the policyholder shares in the risk, helping to deter small, frequent claims. Options A, B, and D do not describe the purpose of a deductible. Question 72. Which of the following best describes actual cash value in an insurance policy? A. The cost to replace an item minus depreciation. B. The replacement cost without any deductions. C. The highest amount the insurer will pay in a claim. D. The appraised value of the property at the time of sale. Correct answer. A. The cost to replace an item minus depreciation. Explanation. Actual cash value, ACV, represents the replacement cost of an item minus depreciation, reflecting its current value rather than the original purchase or replacement cost. Options B, C, and D do not accurately define ACV. Question 73. In which situation would uninsured motorist coverage apply? A. When the insured hits an animal on the road. B. When the insured causes damage to another driver's car. C. When the insured is involved in an accident with an at-fault driver who lacks sufficient insurance. D. When the insured's car is stolen. Correct answer. C. When the insured is involved in an accident with an at-fault driver who lacks sufficient insurance. Explanation. Uninsured motorist coverage protects the policyholder if they are in an accident caused by another driver who either has no insurance or insufficient coverage. Options A, B, and D do not describe situations covered by uninsured motorist insurance. Question 74. What is the primary benefit of purchasing an umbrella insurance policy? A. It lowers the cost of the policyholder's primary insurance policies. B. It provides comprehensive coverage for all types of incidents. C. It offers additional liability coverage beyond the limits of the underlying policies. D. It insures against property damage only. Correct answer. C. It offers additional liability coverage beyond the limits of the underlying policies. Explanation. Umbrella insurance extends the liability coverage limits of home, auto, and other personal insurance policies, providing extra protection against large claims or lawsuits. Options A, B, and D do not correctly explain the purpose of umbrella insurance. Question 75. What does a policy's declarations page typically include? A. A list of excluded perils. B. Information on how to file a claim. C. The names of the insured, policy limits, and premium amount. D. A detailed description of how claims are processed. Correct answer. C. The names of the insured, policy limits, and premium amount. Explanation. The declarations page is an overview of key policy details, including the names of the insured, coverage limits, premium amount, and effective policy dates. Options A, B, and D cover other sections or documents of the policy, not the declarations page. Question 76. Which of the following is an OTA factor used by insurers to determine auto insurance premiums? A. The policyholder's driving history. B. The policyholder's age and gender. C. The color of the policyholder's car. D. The policyholder's location and type of vehicle. Correct answer. C. The color of the policyholder's car. Explanation. Insurers consider factors like driving history, age, gender, location, and the type of vehicle when determining auto insurance premiums. However, the color of a car is not typically used as a factor in premium calculations. Options A, B, and D are valid underwriting considerations. Question 77. What type of insurance policy would cover an injury to a guest at the policyholder's home? A. Collision insurance. B. Liability coverage under a homeowner's insurance policy. C. Comprehensive auto insurance. D. Personal property coverage. Correct answer. B. Liability coverage under a homeowner's insurance policy. Explanation. Liability coverage in a homeowner's insurance policy covers injuries to guests or visitors on the insured's property. This protection ensures that the policyholder can cover medical expenses or legal fees associated with such incidents. Options A, C, and D are unrelated to this type of coverage. Question 78. What does bodily injury liability insurance cover in an auto policy? A. Damages to the insured's vehicle. B. Medical expenses and lost wages for others injured by the insured. C. Comprehensive coverage for damages unrelated to accidents. D. The repair of pothole damage to the insured's car. Correct answer. B. Medical expenses and lost wages for others injured by the insured. Explanation. Bodily injury liability covers the medical expenses and lost wages of third parties injured in an accident where the insured is at fault. Helps protect the insured from financial liability related to these damages. Options A, C, and D do not describe bodily injury liability coverage. Question 79. Why might someone consider purchasing a rider for their homeowner's insurance policy? A. To avoid having a deductible on claims. B. To gain additional coverage for items not fully covered by the base policy. C. To reduce the overall premium of the policy. D. To ensure their property taxes are covered. Correct answer. B. To gain additional coverage for items not fully covered by the base policy. Explanation. A rider or endorsement provides extra coverage for valuable items or specific situations that may not be adequately covered under the standard policy terms. Options A, C, and D do not correctly describe the purpose of an insurance rider. Question 80. What is the difference between open perils and named perils policies? A. Open perils policies cover only specific losses, while named perils cover all losses. B. Named perils policies cover only specified events, while open perils cover all events not specifically excluded. C. Open perils policies require higher deductibles than named perils. D. Named perils policies are only applicable to life insurance. Correct answer. B. Named perils policies cover only specified events, while open perils cover all events not specifically excluded. Explanation. A named perils policy only covers losses caused by events explicitly listed in the policy, while an open perils policy covers all events except those specifically excluded. Options A, C, and D do not accurately describe the differences between these types of policies. Question 81. Under a standard homeowner's insurance policy, which of the following perils is typically not covered? A. Fire. B. Theft. C. Earthquake. D. Windstorm. Correct answer. C. Earthquake. Explanation. Standard homeowners insurance policies generally exclude earthquake damage, which must be covered by a separate endorsement or policy. Fire, theft, and windstorm are commonly included in basic homeowners coverage. Question 82. In a commercial property policy, the coinsurance clause is designed to A. Eliminate the deductible for small claims. B. Encourage the insured to insure their property to a certain percentage of its value. C. Limit the amount an insurer will pay for a liability claim. D. Provide coverage for additional living expenses. Correct answer. B. Encourage the insured to insure their property to a certain percentage of its value. Explanation. The coinsurance clause requires the insured to carry coverage equal to a specified percentage, usually 80%, 90%, or 100% of the property's value. Failure to do so results in a reduced payout on claims, as the insured essentially becomes a coinsurer. Question 83. Which of the following is covered under the liability section of a personal auto policy? A. Damage to the insured's own vehicle from a collision. B. Injuries to passengers in the insured's vehicle due to the insured's negligence. C. Medical expenses for the insured's own injuries. D. Physical damage to the insured's personal property in the car. Correct answer. B. Injuries to passengers in the insured's vehicle due to the insured's negligence. Explanation. The liability section of a personal auto policy covers bodily injury and property damage for which the insured is legally responsible, including injuries to passengers in the insured's vehicle when the insured is at fault. Damage to the insured's own vehicle and personal property is covered under different sections. Question 84. Which of the following statements about umbrella liability insurance is correct? A. It covers only property damage. B. It provides excess liability coverage over primary policies. C. It replaces the need for homeowners and auto insurance. D. It covers medical payments for the insured. Correct answer. B. It provides excess liability coverage over primary policies. Explanation. An umbrella policy provides additional liability coverage that goes beyond the limits of the insured's primary policies, such as homeowners and auto. It acts as extra protection for large liability claims. Question 85. Which type of commercial auto insurance coverage is specifically intended to protect against damages caused by uninsured or underinsured drivers? A. Collision coverage. B. Comprehensive coverage. C. Uninsured underinsured motorist coverage. D. Liability coverage. Correct answer. C. Uninsured underinsured motorist coverage. Explanation. Uninsured underinsured motorist coverage in a commercial auto policy provides protection if the insured's vehicle is hit by a driver who either has no insurance or insufficient insurance to cover the damages. Question 86. The business purchases business interruption insurance. This coverage is designed to A. Compensate for lost income due to physical damage to the business property. B. Cover expenses associated with employee injuries. C. Pay for repairs to business equipment. D. Replace inventory damaged by fire. Correct answer. A. Compensate for lost income due to physical damage to the business property. Explanation. Business interruption insurance provides income replacement if a covered peril causes the business to halt operations temporarily. It is meant to keep the business financially stable until it can resume normal operations. Question 87. Under the personal articles floater PAF, which of the following would typically be covered? A. General household items. B. Scheduled high-value personal items like jewelry and art. C. All items of personal property. D. Business inventory. Correct answer. B. Scheduled high-value personal items like jewelry and art. Explanation. The personal articles floater PAF provides coverage for specific high-value items that may have limited coverage under standard policies such as jewelry, art, and collectibles by insuring them separately. Question 88. Which of the following best describes replacement cost coverage? A. It pays the market value of a damaged item. B. It pays the depreciated value of a damaged item. C. It reimburses the policyholder for the cost to replace an item with a new one similar kind and quality. D. It covers the sentimental value of a damaged item. Correct answer. C. It reimburses the policyholder for the cost to replace an item with a new one similar kind and quality. Explanation. Replacement cost coverage reimburses the policyholder for the current cost of a new item of like kind and quality rather than the depreciated or actual cash value cost. Question 89. Which of the following is excluded from coverage under standard commercial general liability CGL policy? A. Bodily injury cost to customer-owned business premises. B. Damage to client's property caused by the business's negligence. C. Pollution cleanup costs. D. Legal expenses from a lawsuit alleging slander. Correct answer. C. Pollution cleanup costs. Explanation. Standard CGL policies exclude pollution-related claims. Pollution cleanup and environmental liability typically require separate environmental liability or pollution liability coverage. Question 90. Which of the following perils is typically covered under the named perils form in a commercial property policy? A. Nuclear hazard. B. War. C. Fire. D. Earth movement. Correct answer. C. Fire. Explanation. Named perils policies specifically list covered risks, and fire is one of the most commonly included perils. Nuclear hazard, war, and earth movement are generally excluded unless additional endorsements are purchased.